So picture this. You're buying a new smartphone online or maybe a BYD electric vehicle, and right at checkout, there's that little box, Add Protection Plan. You click it, get instant peace of mind, and move on.
Yeah, and you probably have, like, no idea. You just interacted with a massive, completely invisible global machine.
Right. Welcome to the deep dive. Today we're unpacking an exclusive private IQ research report on Bolttech. They are an insurtech unicorn operating basically entirely in the shadows.
And our mission today is to figure out how they achieved this massive global scale and, unusually for this cash-burning digital sector, actual profitability.
Yeah, the profitability part is wild. So how does this invisible machine actually work?
Well, their model is a B2B2C embedded ecosystem. I mean,
Mm.
they don't sell to you directly. They connect over 230 insurers with more than 700 distribution partners across 39 markets.
Wow. I keep thinking of them as the Intel inside of the insurance world because you don't see Bolttech on the smartphone box.
Exactly, yeah.
Yeah. But their API, which the report notes runs over 220 microservices, that is what makes that checkout button actually work.
Right, and having 220 microservices means instead of one clunky software block, they have hundreds of tiny specialized digital workers. They instantly adapt to whatever partner's website they're plugging into.
Which is how they stay invisible.
Exactly. And sitting invisibly inside that checkout flow is how they solve the biggest problem in digital insurance, which is customer acquisition cost.
Oh, because traditional insurance companies spend billions on flashy commercials hoping you'll think of them when you buy a car.
Right. Bolttech just piggybacks on the partner's marketing spend. You know, you're already buying the phone, they just catch you at the register. That natively embedded approach slashes their acquisition costs by like 75%.
75%. Piggybacking instead of advertising. I mean, that explains how they hit EBITDA profitability, which is practically unheard of here.
It really is.
And the private IQ proprietary metrics really back this up. They have a private IQ smart score of 4.4 out of 5, with a perfect 5.0 for growth.
Yeah, those numbers are stellar.
But hold on, because I was looking at their private IQ alt data score, and it's a completely mediocre 2.9. For a company crushing it everywhere else, that looks like a giant red flag. What am I missing?
Well, the breakdown of that score tells a different story. The 2.9 is heavily dragged down by a 2.0 in their socials metric
Oh, okay.
because they don't want a viral consumer presence. They are a B2B enabler.
Yes.
Spending money on, say, TikTok campaigns to get you to follow an invisible software provider would be a complete waste of capital.
Oh, I see. So a low social score is actually proof of capital discipline.
Exactly. And look at their human capital rating within that same private IQ index. It's a solid 3.5.
Which feels weird, actually. Why hoard top-tier talent if your whole selling point is invisible automated software?
Because, well, AI cannot negotiate with government bureaucrats.
Ah, right. Good point.
Bolttech operates in 90 jurisdictions worldwide. To maintain that massive regulatory moat, you need highly specialized, expensive legal and compliance talent handling the licenses while the software handles the transactions.
Let's talk about that software handling the transactions, actually, because the scale here is $85 billion in quoted premiums annually. The report mentions a GenAI factory driving a 96% automation rate for device protection claims.
Yeah, the real-world application of that is wild. They can orchestrate a doorstep device replacement in just 6 hours without a human adjuster ever reading a file.
Wait, really? How does an AI physically do that in 6 hours?
Well, the AI instantly verifies your claim, cross-references local courier inventory in real time, and dispatches the closest replacement device directly to your door. The entire supply chain is digitally mapped.
Okay, but aggregating all that real-time, highly sensitive data for over 6,000 products, doesn't that just paint a giant target on their back? If you centralize $85 billion worth of global transaction data, hackers are going to notice.
It's the ultimate trade-off, and it is their biggest vulnerability. The report highlights an alleged Everest ransomware incident where 186 gigabytes of highly sensitive data was purportedly exfiltrated.
Oh, wow.
Yeah, when you build a digital-first infrastructure across 39 markets, a single weak point can expose the whole network.
It really is a high-wire act. Bolttech is successfully redefining insurance economics by acting as this highly profitable, invisible bridge. They solved the acquisition problem, but inherited a massive cybersecurity war.
Right. The price of being the invisible plumbing is that you have to constantly secure every single pipe.
Next time you casually click Add Protection Plan at checkout, you'll know there's a sprawling, AI-driven global infrastructure moving gears behind that single click. Which leaves us with a final thought to chew on today.
Oh, what's that?
If this kind of embedded, invisible insurance becomes the global standard, will traditional consumer-facing insurance brands eventually become obsolete? Are they destined to be reduced to mere capital providers sitting quietly behind tech platforms? Definitely something to think about next time you check out. Catch you on the next deep dive.